So I'll start today's update with looking at the US market because the S&P is the only index which has actually made a new high, an all-time high this month. The Dow of course failed to get there, and while it did that, we have a negative divergence in the RSI and in the monthly momentum. So this is the monthly chart. But the reason I'm noting this is, look at what happened here is you went and tested from the lower end of the range, lower band, all the way to the top end, the upper end of the band, even while the monthly momentum was diverging. And this is very similar to what even Nifty has been doing. So I just wanted to highlight that at the beginning. But coming back to what I have written yesterday is that you have a 5-wave decline in the S&P. Yesterday's video, I did note that if you get one more low in the US indices, you would have a 5-wave decline in the S&P, which then I would mark as wave 1, and then we would anticipate a wave 2 retracement of that. So this 5-wave means that you're not going to be making new highs, but it also means that you will get a retracement of this fall, maybe 50%, 60%, 61% is normal. Many times recently we even see more, 78% also has been seen. But let's at least expect 61%. So on the S&P, that would be at around 2897. So that's almost around 2900. And we see this across most of the US indices. So this is the Dow 1, 2, 3, 4, and we got the 5th yesterday. So the next turn, which we are seeing some signs of today, because simply, again, unfortunately, we have to follow statements coming out of Donald Trump, and his overnight statement is causing US futures to hold up a bit. And whenever they do, whether it falls more and then turns up, you complete the 5th wave. When it turns up, you can get a retracement of this side. So you can see that also on the NYSE composite. I've marked that as 1 and 2. You can see it in the NASDAQ index, both the 100 and the composite. The only two indices not showing the structure are the transports and the Russell, so they can always do something different, as they often do. But I think with these key indices showing a 5-wave decline, it sets up two things. One is that we are marking this as wave 1 of a fresh decline phase starting, and whatever bounce we get would only end up being wave 2. This is my general thought of what has developed over there. But simultaneously in our own markets, we still don't have a certain 5-wave decline. I did mention that possibility yesterday, but when we look at the hourly charts, what we do see in line with what I've been saying is that this is A, B, and C, and this fits best as a 5-wave because it's very well channelized. So when you get a channelized 1, 2, 3, 4, 5, then it's ideally a complete 5, in which case this entire fall cannot be 5 is what I was trying to think about. And so ideally it is A, B, and C completing, or 1, 2, and 3. So the next bounce would then only be a 4th wave unless it is still got something more on the upside to complete. Now I cannot really bet on that, but what we can say is, even if, why can't we have started another decline which is ABCX? It doesn't have to be 5 waves at a larger degree. But a 4th wave pullback can usually be at least a 38% retracement of the 3rd. So that gives us a minimum number of, going back to around 11,372 to start with. And when we get past that, then we can sort of discard the 4th wave scenario into maybe we are doing something else, whether it's an X or whether it's a larger degree Z, and E is still not complete. So that option, and the reason we're keeping this option open is only because one thing which I think is playing on everyone's mind, including mine, is that what will happen on the election results. Will there be a big move because it has happened the last 3 times or not? And that, I think, psychologically is the only thing playing on the mind. So when the US actually does its wave 2, and we have our elections coming in, will we manage to get a result outcome that can cause a bigger spike than normal? Else you simply end up doing a retracement or a test of the highs and then turn down again. Or in the interim, if there is some negative news flow, for all you know, this becomes 4, 5, and then only you get a bounce. So you'll only get a retracement. In that case, you have a 5 wave, and you'll not really make new highs. So that setup is still not there right now. It's only 3 waves, and so we can be open to different possibilities. But again, I thought it was oversold here, maybe early, but it is still very, very oversold here, and I think due for some kind of a pullback to happen. And we'll watch what happens near 11,375. That should give us clues as to how it will develop further from there. In the meantime, what we should look at is where is the larger support. Because while we could have bottomed yesterday, there's still a little more downside based on what we call a reverse channel and the 61% retracement of this entire rise, which comes in at around 11,085. The reverse channel means you take the two highs that encompass the entire price action. Some people like to take the highest point, but I found this area showing prices actually piercing through that trend line, so I usually adjust it to include all the price action inside the trend line, and then I take a parallel line of that and put it at the bottom, this bottom. The other trend line, of course, is the larger one, which starts from this low, and so you can see two trend line supports here which would break and confirm a larger trend reversal. As of now, these levels are, this one matches with the 61% retracement. It's very close to in fact it's exactly at 11,085, which is the 61% mark. So I think that's the most important level to watch in terms of immediate support. The second one, of course, for a larger trend reversal would be near 11,000 itself, which is this second trend line. Now similarly, the mid-cap indices, RSI is down to around 22, and this fall, having extended yesterday, I mentioned, would then become a 5-wave decline both in the mid-cap and small-cap indices. So in these indices, it looks like what we have started is A, B, and 1 of C, 2 of C, and 3 of C would happen next. This from the mid-cap index has made its highest point here and can be 9 legs on this chart, 1, 2, 3, 4, 5, 6, 7, 8, 9. So it encompasses a 5-wave, whereas the small-cap Nifty small-cap index made its highest point here on the 16th of April, not where the mid-cap did, and on the daily chart it looks like 1, 2, 3, 4, and 5 here as well. So as and when they actually do a reversal, they would only be retracing this. But remember, mid-cap indices tend to bounce in much smaller degrees and retracements than large-cap indices. So don't really expect some kind of a freakish move. It might just be a very, very small pullback, 23%, 38% max in terms of retracement. Not the typical 61% we see in large caps, and so it might not be the most interesting, but at the same time it will allow us to mark the initial legs as 1 and 2 over here, and I think that remains a possibility.